Any trader, unprofitable or profitable, will be going through slow trading periods, and how you handle these slow trading periods will dictate whether you become profitable, maintain your profitability, or stay unprofitable for the rest of your trading journey. So in this video, I want to go through my mindset as a profitable trader about how I handle slow trading periods, because I'm going through one right now, if I'm being honest with y'all. And I want to show you guys how I approach this and how I've approached this in the past to get through it and maximize my profitability, so that in the future, if you guys go through it, you're mentally prepared, or if you're going through it right now, you know exactly how to handle it to minimize your unprofitability and maximize your chances of staying unprofitable or becoming it if you're not already. So now that we're on the charts, I'm going to be quickly going over the trades I took over the past month since the start of September, since today is September 9. And today we actually took a losing trade. We lost money, but it was actually a valid trade. It was completely aligning with our rules, took the setup, ended up losing, which is 100% okay with me. Those are the type of trades I want to be taking. Valid losses and valid wins. But over the past week, if I just zoom out, the previous day, Monday, I didn't get a setup. The previous day as well, what is this? This is Friday. I actually got no setups on this day as well. I actually got setups occurring after my trading window when I decided to hop off. The members did end up taking some of these setups, but personally, since it's out of my trading window, not in my rules, I'm not taking it. The day before that, Thursday, we had a break-even day as well, where we made one trade but ended up getting hit by our break-even stop loss. The day before that, Wednesday, the week before, or last week, we had two trades and we were slightly above break even because we closed our position like right above break it, right around profit in break even, or right around in profit around break even, caused us to be slightly in the green. But that's supposed to be break even day for me anyways, according to the strategy. And then Tuesday, no trade as well. Monday, markets were closed, so there wasn't really any opportunity. So since the start of September, we're already a third into the month and I haven't made a single dollar. What is going through my head? So there's three tips I have, or three kind of mindset tricks that I have that I use anytime I'm going through a break-even period or a slow period or even a red period. The first mindset trick, I would say the most important one that you need to implement to make sure you're able to stay sustained through these slow periods, is just going over every single trade that you have taken over the past week, month, whatever the slow period is, and seeing, are the trades that I've taken aligning with my strategy, with my plan that I've set for myself, right? And this requires reflection, a lot of journaling, going back on your trades, seeing your thought process. What was my thought process going into this trade? Where did I actually enter? Was it aligning with my rules? Where did I exit? And so on. This can be a little bit difficult to do once you've already placed a trade and you're trying to reflect back on weeks worth of trades. It's not easy to remember your thought process. This is why I always preach you need to be journaling your trades and tracking your thought process after every single trade you take, because that's when your mind is fresh and you can remember exactly why you got in, the emotions you're feeling. Maybe you felt a little bit of FOMO, and it's really easy to describe it when it's right after the trade happened. But if you're trying to break it down a week after, you might not remember that feeling too well, and the same mistake is going to continue happening until it happens again and again and again, and you consistently reflect on it and remember it right at the spot. When you remember it right at the spot and you write about it and you continue to write about it every time you get this feeling, slowly the pattern will pick up in the back of your head and you'll catch yourself before this mistake even happens, because you'll notice common thought processes that occur that usually spike up this FOMO or emotional decision making that make you jump in when you're not supposed to. So if you make sure you're reflecting and breaking down your trades and talking about your thought process of why you got in and why you got out and what you saw and what made you want to press the end buy or sell button, you start to notice common patterns in your thought process that you can avoid in the future. And if you guys don't know how to properly track or journal your trades, you can check out the description. I have a separate Notion journal that I built myself. You guys can make a duplicate of it. And if you don't know what Notion is, it's a very helpful kind of Google Docs type spreadsheet, combining Google Sheets and Google Docs together type of platform where you can make pages, make journals, and a lot of other stuff. But I use it for personally journaling. Make your own copy of that and learn how to use it using my journal video in the past. Teaches you guys exactly how to track these trades accordingly so you can minimize these mistakes. So the first thing, go over every single trade that you took. Make sure all the trades that you took followed your strategy and followed your plan. Reflect on them. If they didn't, look into why. What was your thought process for getting into this and why you didn't follow your plan? What emotion do you feel? And if you can't remember, make sure you're actively tracking this and reflecting on your trades going forward so that you can spot common patterns in your thought process that can lead up to these mistakes so you can catch them before they happen next time. All right. This will take some trial and error. You're not going to magically become psychology genius and not make these mistakes. It's trial and error. So you might continue making them, but you're going to constantly be improving. That's the best part. And this goes to number 2. All right. You want to judge yourself not by your dollar amount that you've made or lost, but by your execution, right? As a profitable trader, or even as an unprofitable trader, you should know that becoming profitable doesn't mean you're not going to have any more losing trades. It means that your wins are going to be either bigger than your losses, or you're going to be winning more often than you're losing, allowing you to be profitable in that sense. Doesn't mean you're going to be winning every single time, and it doesn't mean you're going to be losing every single time, but as a profitable trader, if let's say you have a 1-to-1 risk to reward ratio, and you want to be profitable, you got to be winning more often than you're losing. Okay, and something that you might see is a 60% win rate where you're winning 60% of the time, maybe 70%, maybe upwards up to 80%, which is pretty crazy, but that's still possible. And what does that tell us? 60%, 70%, 80% win rate. That means it's not 100% win rate. It's a 60% win rate, meaning we're winning just slightly above half the amount of times. So we're winning on average 60 out of 100 trades, let's say we've taken. If we grab a past 100 sample of trades using this specific strategy that has the 60% win rate and then 1-to-1 RR, we should be winning average around 60 of them and losing 40 of them. So if your win rate 60%, your loss rate is also 40%. So you should be mentally prepared to go through those 40% of losses because that's what allows you to have the 60% win rate. Okay, those 40% of losses is what I consider a valid loss because those are all aligning with your profitable strategy. Being profitable doesn't mean maximizing how many times you can win. It's by taking advantage of a small edge that allows you to have an advantage, a statistical advantage over the market. Just like how the casino has a statistical advantage over the gambler in many different casino games. All right, that's the exact mindset you want to have. Think about in order to win like the house, like the casino, you have to think like the house and play like the house. You can't get frustrated over a few losing days because for some reason someone got lucky. Or the market somehow is just making you go on an unprofitable short-term losing streak or losing sequence of a week or a month, right? That's another mindset I always make sure I have myself of this kind of perspective of just to zoom out and understand that this actually goes to my point number 3, which I wanted to mention. I jumped into it early, which was to think in probabilities, all right? You're not going to be winning in the long run forever. You're also not going to be losing in the long run forever. It's going to be a mix of wins and losses, but your small edge in your favor, your small profitable strategy that has, for example, a 60% win rate with a 1-to-1 RR is going to allow you to make money in the long run. Now, you guys might be like, but that's barely profitable. I'm not going to make that much money. Well, you don't need to be chasing higher percentages or higher win rate percentages or higher RRs because that's going to be a lot more difficult to scale and actually do that profitably. What you should be doing instead is focusing on getting more capital because if we really think about it, making 5% a month on $500 is, or I should say, let's say $1,000. That's what? My brain's farting right here. Making 5% on $1,000 is going to return you $50 a month. But if you make 5% off of $100,000 or even $500,000, you're going to be making anywhere from $5,000 to like $25,000 a month if you think about the capital allocation you're having. And with the opportunity of funded accounts, you guys can have an insane amount of leverage, an insane amount of capital allocation for a very small cost, a fraction of the cost that will require for you to actually have that much leverage and make that much return. Okay, so leverage these funded accounts and think in probabilities. All right, the fact that we're using funded accounts gives us the advantage of not having to even risk our own money on the line. Yes, we have to buy the challenge and buy the funded account. But imagine if we wanted to make this much money, how much money would we have to put into the market, into an account to make this amount of money? For people who want to make 1K a day or even like 20K a month, 10K a month, you're going to require an account of at least $100,000 to $500,000, depending on your risk tolerance. If you're a risky type of person or if you want to be a little bit safer. So just understand the advantage that prop firms and funded accounts give us, leverage that, and think in terms of probabilities. All right. This is a bonus tip I want to give you guys, is don't be so married to one single funded account. In these short-term losing periods, you might blow an account or two, and you have to be 100% okay with that, ready to get back in the mix, continue risking the consistent position size you have, because prop firms, the way they're structured, it's a completely different game than a regular personal account. You're going to blow accounts. You're going to lose money. It's all a matter of how you're going to handle them and how you're going to get back right into the game with the same mindset, because prop firms are made for you to blow accounts. That's just the way it works. It's made for you to blow the accounts. All right. But the advantage you get is by having so much leverage that you can get a massive payout to offset the cost that you've spent on your evals and your activations. And that also allows it to be profitable in conjunction with your profitable strategy. Okay. If you get scared and start risking really small, it's going to be really difficult to get to the point where you can request a payout. You might find yourself being on an eval or a challenge account for months on end, continuing to pay fees. And before you know it, you racked up so many fees and you're still on the same funded account, making zero progress around break even because you risk too small, or you're just not working on building a profitable strategy. So that kind of goes back again, quickly summarizing the 3 points. Go over every single trade. Make sure every single trade you follow, every single trade you took, follow the strategy that you have, follow the profitable plan that you have for yourself. And if it didn't, reflect on why it didn't. And if it did, actually, that's something you should reflect on as well. You can go write down what made you follow the plan. Was there something that caught your eye where you caught your mistake and you're like, no, I can't give into this FOMO, and you're like, decided on following your strategy this time? Write about that, because elaborating on that thought process is going to make it easier to replicate in the future. Because as you're writing it down, you're kind of saving down a thought on like a document on paper. And that way it's going to be really easy to refer back to. And if you track back to that multiple times and go over that lesson that you learned, you can replicate that in the future so you don't make the same mistake over and over again. You'll get over a mistake a lot quicker than trying to remember all the mistakes you made in the past and all the thought process that you had in the past and trying to call that up right before a trade. There's already so much shit happening on the market like throughout the entire session. It's not easy to memorize all your past lessons and remember that while there's so much happening on the charts. All right. So go over every trade, reflect on your trades, make sure they followed your plan, and break down your thought process to catch your mistakes before they happen. Number 2, judge yourself based on your PNL, not your execution. There's going to be losing periods. A profitable trader has losses. The best way to maximize your profitability is by focusing on your execution, because flawless execution also follows profits. Okay. Or follows profits. Or profits follows flawless execution. That's a better way to say it. Number 3, zoom out, think in terms of probabilities. You want to be like the casino. You have a small edge in the long run that allows you to profit off of when there's a lot of capital allocated to it. All right. If there's think about a casino. If they had a game that was extremely rigged and profitable for them, it wouldn't work. No one would play it. It'd have a lot less playtime. But the stuff that makes it seem like the player has a chance of winning, that makes it very enticing for the gambler, which allows the casino to make a lot of money because it's just a slight edge in their favor. And with a lot of capital being implemented into it, yes, the gambler might win sometimes in a row as well. Just like as a trader, you might have a losing streak with your profitable strategy, but that doesn't mean it's broken. It's broken if it does that for an extended period of time of months and months and months on end, and you almost return negative for a very long period of time. Sure, then it requires tweaking. But in the period of just a short-term losing streak of a week, maybe even a month, maybe even a month and a half of slow, just break even or blowing accounts, as long as you're following the strategy, following the rules that you set for yourself for your profitable strategy, you are fine. There's no reason to overthink. That's why you should always judge by your execution and not by your PNL, which was point number 2, if you remember. All right. Use all these tips to your advantage. Write them down if you have to and implement them into your trading and recall them every single day that you get up trading for the market. That way, you're constantly remembering the right mindset to have, because strategy is one part, but mindset is a whole different game. If you can remember these 3 tips and implement it into your trading, I promise you guys, you're going to level up your trading significantly. All right. Let me know if there's any other question you guys have that I didn't address down in the comments, or somebody else will address that as well and help you out. But that's going to be a wrap for this video. I'll catch you guys in the next video or in the Discord tomorrow. Peace.